Welcome to Crosstalk. I'm Peter Lavelle. Facebook's initial public offering is being called a very big deal, and many hope the IPO will lift the entire tech sector. But is the IPO a good one? Will public ownership of Facebook negatively impact the company's success? And is it a profitable investment? To Crosstalk Facebook's IPO, I'm joined by Jay Ritter in Gainesville. He's a professor of finance at the University of Florida. And in Toronto, we cross to Peter Leeds. He's a financial analyst and publisher of the Peter Leeds newsletter. All right, gentlemen, Crosstalk rules in effect. That means you can jump in anytime you want, and I really very much encourage it. If I could go to Peter Leeds in Toronto, on the face of it, is this going to be a good IPO? Will it be successful? And is it a good long-term investment?
Thanks for having me on the show, Peter. I think at first that the price is going to go up. I think it'll be a successful IPO on first glance, but then you're going to have to look at the valuation ratios. You know, it's going out at 100 times earnings, 25 times revenues. That's way too high. We think a lot of people are going to jump into it just because it is Facebook, and we think it's going to drive the price further. And at the end of the day, this stock over time will start coming back down.
Jay, what do you think about that? I mean, more hype than common sense being touted here when we look at this IPO? I mean, obviously, Facebook is very, very popular, but is its popularity reflected in its valuation?
I think Peter's scenario is very plausible. With the huge brand name recognition, it's possible that investors are going to drive up the price, especially since a relatively small percentage of the company is being sold. At the valuations that people are talking about, 100 times sales, 100 times earnings, 25 times sales, the long-run upside for investors is limited.
Okay, if I can go back to Peter in Toronto, I mean, last year Facebook generated $3.7 billion, 88% up from the year before. Those kind of numbers are not sustainable, are they?
Well, what's going on in North America, you have to divide it between, developed nations and developing nations. Developed nations, North America, for example, Europe, they've pretty much got critical mass there. They're not going to get a lot more people. Anybody who's on Facebook, that's going to be on Facebook, is already there. There's not a lot of room for growth. All the growth is coming from developing nations now, Russia, India, China. But the problem with that is that they're not able to convert that into the same degree of revenues from the advertisements. It's notorious for not driving as much advertisement spending, advertisement dollars. And so a lot of the growth may be behind Facebook, and going forward it might have a little bit of trouble getting to the next level.
Okay, Jay, who's going to buy this stock? I mean, are you going to see institutional investors? I mean, pensions? I mean, individuals? Who do you think it's most attractive to? Because institutions are not really represented on Facebook. I mean, people are. Okay, is it the people that are on Facebook going to be interested in this stock? Do you think?
Some of them, with over 800 million users, it doesn't take a very big percentage of them to be interested. But the reality is institutional investors, if they are going to buy a lot more shares. An individual might buy 100, 200, even 500 shares, but an institution might be buying 1 million shares, 5 million shares. And a lot of institutions are going to be buying.
Okay. Peter, I mean, there's some precedents out there on when we look at the tech sector, and the two most well-known ones are Google and America Online. What precedent do you think Facebook might follow? Or will it be just unique?
It's going to be unique, but they are going to have a lot of competition from Google+. Google's decided to get into the social media space, and they're going to do that pretty aggressively. And overseas, they've got a lot of competition too, from Brazil, Japan, China, India. That these are nations where they have a platform there that they're going to start leveraging their platform to potentially take users away from Facebook. Facebook's had notorious problems trying to get into China at all. So you're going to have a lot of people who have more choice going forward. They haven't had a lot of competition yet, but those days are ahead of them, and now they've got to see we have to see how they're going to react to that.
It's interesting, and you point that out. I mean, in Russia, Facebook is not particularly popular. It's here, but well, there's a Russian version that people are very attracted to. Jay, if we can look at the emerging markets, one of the interesting things is, advertising dollars is a big part of the future of any company like Facebook. In emerging markets, people do not necessarily are attracted to the ads because their spending ability is much more limited than, let's say, in North America or the English-speaking world. I mean, is this something that's being played into? You can grow the numbers, but you're not going to get any revenue from them.
Well, there's both an issue of how many users and then the revenue per user. The per capita income growth in certain emerging markets does result in a lot of long-term upside potential as lower middle income consumers rise to be middle income and higher middle income consumers. The bullish case for Facebook is largely based upon the Google model, where Google has demonstrated that a lot of money can be made on targeted search. It's a very efficient form of advertising, and Google has been able to grow its revenue per user very substantially. Facebook has a lot of that upside potential as well, but things could go wrong. AOL, America Online, had very large market share 15 years ago, and they've largely faded. Research in Motion with the BlackBerry had a very big market share a couple of years ago, and they've run into some tough times. So with Facebook, they've got a large and growing potential market. A case can be made that they're going to be as successful as Google, generating profits of $9.74 billion just 13 years after being founded. But on the other hand, they could fall off of that growth path as well. And that's the problem with the very high valuation that people are talking about, that it's got that optimistic growth path built into the price, and it doesn't leave enough of a possibility that they're going to fall off of that growth path.
Targeting advertising is very interesting, Peter, because on Facebook particularly there's the privacy issue, and people are getting more and more sensitive to that issue, and targeted advertising is antithetical to privacy. Is this something that investors should be worried about and thinking about? Because the users of Facebook want their privacy, or at least most of them do, and of course the advertisers want to know as much as possible about these people, and Facebook is going to have to make a decision, maybe even make a compromise, which could also hurt its image and maybe its popularity.
That's an excellent point, Peter. What's going on right now, think of it like a seesaw, where on one side you've got Google or Facebook trying to maximize their advertising targeting by watching everything you do. And on the other side of the teeter-totter, you've got people who are tired and weary of all their actions being tracked. And most recently, you've had all sorts of backlash in terms of privacy issues with the SOPA issues and with the Google problems. And now you've got, Facebook's tried to address this by having, a 20 years of audits with the SEC for privacy. They've also changed their privacy laws. But at the end of the day, people don't trust the internet when they go on there. And when they're going around on Facebook, it's tracking what books you like, what videos you watch, who your friends are. And it's getting to be a little bit too much, I think, and people are starting to have a little bit of a backlash against it.
What do you think about that, Jay? I mean, it's the flavor of the month right now, but as we go down, I mean, people are going to invest in this company because they want to make money, not just because they like Facebook. Maybe there's an overlap of the two, but people are going to go in there and they're going to want to be very aggressive. They're going to want this company to perform, and the valuations are very high. They want the valuations to meet expectations. Do you think that, Facebook is going to have a real challenge in dealing with the privacy issue and with sales? Because, there's high expectations here, like we haven't seen for a while.
Well, with the privacy issue, there's kind of an anonymous lack of privacy in terms of, does it bother me if Google or Facebook or LinkedIn is able to tell some advertiser I'm one of 47,000 anonymous IP addresses that have some of the following characteristics in terms of my age, a rough guess for my income level, and the fact that I subscribe to several business magazines and do a lot of international traveling. You know, if it's not identifying me by name, does it bother me that some targeted ads get sent my way and that I don't get ads that I have absolutely no interest in? You know, in terms of that anonymity, if I'm just a number, that doesn't bother me. And on the other hand, if you've got some government that is then demanding, we want the names behind these IP addresses. That's another issue.
Okay, Peter, Jay told me before the program he's not on Facebook. I'm on Facebook and you're on Facebook. I mean, do you check any of the ads? Do you click on any of the ads on Facebook?
I never have. I just want to address your guest's last point.
Go ahead.
Okay. And the fact that, you know, you could be on Facebook and it's tracking what you like and what you do at work. Somebody walks by and sees you on Facebook on your monitor, and down the side is a whole bunch of ads that are going to be related to what you like. You might not want that person to know that you're interested in overseas vacations or whatever it may be. And so there's a bit of a privacy breach there, I think, because it's going to put ads that are appropriate to what you've been looking at on your Facebook page for people to walk by and see.
Okay, gentlemen, we're going to go to a short break, and after that short break, we'll continue our discussion on Facebook. Stay with RT. Welcome back to Crosstalk. I'm Peter Lavelle. To remind you, we're talking about Facebook's IPO. And now we're joined by Gareth Feary in Philadelphia. He's founder of MarketTamer.com. If I can go to you first, Gareth, in Philadelphia, thank you for joining us here. One of the things we were talking about earlier in the program is the Facebook's ability to expand. One thing that's very interesting about the 45 million users, that half of them use the Facebook from mobile instruments, you know, like an iPad or something like that. And Facebook gets zero revenue from that if people are accessing it from their telephone. Is this going to have to be the next major breakthrough for Facebook and other social networking? Because I'm not going to pay for advertising on my telephone. I don't know anyone who will.
Well, I think what's interesting about Facebook is that they can actually generate money even if people are not clicking. So they can generate from brand awareness just by impressions being placed on phones. So if you were looking, for example, at the numbers, 400 million plus mobile users, that's set to increase, that at the rate they're generating returns from the regular platform, which is about $5, close to $5 per user, if they can figure out how to monetize that channel, that's potentially another 400 million times 5. That's $2 billion in returns and revenues to the top line that they can generate, which would increase their revenues from current levels up by almost 50%.
Well, that would be very good news. Peter, if I can go to you, you know, when we look at the business model that Facebook has right now, and it's been very profitable, very successful, but as we mentioned earlier in the program, it's not sustainable because you're not going to have, you need a lot more users, you know, a multiple of, or have a much more ad generation when it comes to revenue. Is Facebook going to have to find another breakthrough in social networking to really match the expectations people have for this IPO and further down the line?
I think that they will. I mean, right now, 85% of their revenue comes from advertisements. And like you said, you know, right now there's 400 million people who are using Facebook through their mobile phones, and there's no ads being shown there. And when they eventually, you know, they're working on it right now, but you know, people don't want to click on ads on their phones, and you can't assume that the revenue stream from the mobile phones is going to at all equal what's going on with the desktop computers in the past. And at the same time, you know, most of the growth, like you said earlier, is coming from these developing nations where there's a lot less revenue coming in, even from the ads they display.
Jay, what do you think about the business model that Facebook has? I mean, to what I think everyone would agree it's successful to this point, but when we look at public investors, I mean, private investors in this company right now, how much is it going to change? I mean, how much is the management going to change? And investors obviously want a return on their own investment. I mean, how much pressure is that going to put on the management of Facebook? Because they haven't had to face it before.
Well, I think Google is the appropriate analogy there. Both companies have dual-class share structures where management basically controls the votes, and the public market shareholders have relatively limited control. Now, with Facebook, just like with Google, the founders, the controlling shareholders, on paper are wealthy. In Google's situation, there hasn't been a mass exodus of top management, even though they don't have to work for a living. And based upon that precedent, I don't think there's going to be a dramatic difference with Facebook. They certainly want the company to generate a lot of profits so that when they sell the stock, they can sell it at a high price. But they don't have to worry all that much about pressure to meet this quarter's earnings target. Basically, management is entrenched, whether the public market shareholders like it or not.
Okay. Peter, do you think that's going to change? Because we have Facebook has made compromises in the past in favor of the user instead of profit. They're very open about that. Do you think that's going to change, or do you think it's going to have to change?
I think that from this point forward, when they do the IPO in May, everything changes. I think the corporate culture changes. You know, all the key players are going to be multimillionaires. Do they show up to work at the same time? Do they work as hard? Nobody knows. You know, and they're also going to use a lot of this money that they raise to bring in more people. You bring in fresh blood. You know, that can be good, but it's also going to change the corporate culture. What they've had working for them up to this point is going to change, and we'll see how that plays out going forward. But I'm not very optimistic.
Gareth, what do you think about that? I mean, if you become a multimillionaire overnight, what kind of initiative is it going to be for you to go to work every day, or maybe go out on your own and start your own company, your own ideas? I mean, how much of is this a threat to the corporate culture of Facebook after the IPO?
Well, there's no doubt that the incentives for employees will have reduced. One of the great attractions to the startup culture is the possibility and the perspective of one day going IPO and cashing out. So at this point in time, those employees are in a position whereby they've effectively generated the returns they once hoped when they joined the company. And at this point in time, it becomes very difficult for the management to keep that talent in place. However, if we look at the S1, we see Zuckerberg talk very extensively about the mission of the company. And the reason I believe he's promoting that so heavily is he's trying to take attention away from profitability of the company itself to meet quarterly earnings targets, and indeed for the employees themselves.
He's not going to be very popular with investors then. He won't be popular with investors then if he's going to behave that way. I mean, that's ridiculous, okay? I mean, how can he justify that when other people own the company?
Well, I think that's the challenge. In fact, the corporate governance is a very big issue. We saw one of the pension funds come out just this morning and state that they have grave concerns over the fact that he has such an iron-fisted control over this company. He's got very, very substantial control over the direction, the future, and indeed the earnings and the financials. One thing to note, however, is he did send a signal to the market that he has very strong control over the financials. He sent a statement by looking at the S1, the net income was $1.000 billion. It wasn't, 1 million above or below that. And I believe that was him sending a signal to the markets that he knows exactly how to grow the financials here, both top and bottom line.
Jay, if I can go to you, it seems to me it cuts both ways because, I mean, we have a very successful CEO already. I mean, he's 27 years old. I mean, I think a lot of investors on the other hand would say, leave him alone, let him do what he wants, look what he's created. I mean, it cuts both ways in looking at how management will change.
I think that's true. However, the corporate culture in the U.S. Is dramatically different than in Russia. Partly the laws are different, partly the enforcement of the laws are different, but also the corporate culture is a lot different in terms of executives who loot the company, who don't grow shareholder value, lose a lot of social prestige. Unfortunately, that's not true in every country. I think that Zuckerberg is going to be very loath to not live up to expectations when investors are saying, hey, we're counting on you to grow profits, to keep this as a financially successful company. I don't think he's going to use his voting control to go off on flights of fancy and say, thank you, shareholders, public market shareholders, you gave me some money, and I'm taking it and doing what I want with it. You've got lots of employees as well that own shares, and they care about the stock price. They're not going to be happy if the company doesn't achieve financial goals that make public market investors willing to pay a high price.
Peter, it's very interesting in looking at Zuckerberg's background here. He's not motivated by money at all. I mean, again, it kind of cuts both ways, doesn't it? I mean, he's more focused on the idea and not money. Unfortunately for him, the idea has created a lot of money. Do you think this streak is going to continue? He should just continue the way he is?
Well, Peter, that's a great point. He has proven time and time again that he's never been about making money. Ironically, that put him as the 17th richest person on the earth. And, but he's made it quite clear he's not about making money. And I think that people are putting that concept onto him, assuming that because now they're getting a part of Facebook and it's a public company, that he's going to be trying to do what's in their best interest. And he's never said that he would do that. He's got about 28% of the voting control of the company, and but with that, he's got there's preferred A, preferred B, and common stock. He's got the ability to put the board members in, the ability to basically do whatever he wants. Now you got to ask yourself, at this age, with this much money and the success he's had, is he about making a bunch of people on Wall Street more money, or is he about keeping this Facebook concept as pristine as he has up until this point? And I think it's going to be the latter.
What do you think, Gareth? Who is it going to be? Make Wall Street even more rich, or is it going to be about innovation and going to Web 3.0?
I think there's no doubt that innovation is his primary motivator here. But with that said, he also does have substantial pressures on him that were not there in the past as a private company. Now with the public company, he will be scrutinized to a much greater extent. And looking to the future, what he's really got to figure out is how to monetize beyond the Facebook platform, looking to add revenues like Google does on multiple other sites, and historically they haven't done so well at that. But there's no doubt that he's motivated to make Facebook a success beyond its own platform. That's one of the reasons it's really the Internet ID. It's a user authentication platform.
All right,
as well,
gentlemen, we've all run out of time. Fascinating discussion here. We'll see if the market says it likes the IPO or not. Many thanks today to my guests in Philadelphia, Gainesville, and in Toronto, and thanks to our viewers for watching us here at RT. See you next time, and remember, crosstalk rules.